22-17, cost centers, profit centers, decentralization, transfer prices. So we've got Fenster Corporation. I'm going to call them FC. FC manufactures windows with wood and metal frames. FC has three departments: glass, wood, and metal. The glass department makes the window glass and sends it to either the wood or the metal department where the glass is framed. So they make the window. The window is then sold, and I assume it's sold to an external party. Upper management sets the production schedule for the three departments and evaluates them on output quantity, cost variances, and product quality. Are the three departments cost centers, revenue centers, or profit centers? So in order to determine that, we have to look at how they're being evaluated. And in this case, they're being evaluated through output quantity, cost variances, and product quality. So clearly, they are not being evaluated on how profitable they are. They're not being evaluated on the investments they make in property, plant, and equipment and intangibles. So because of the way they're being evaluated, they have to be cost centers. All right. And it's because of the way they're being evaluated that they are cost centers. So it's not that they have to be cost centers. They're being cost centers because upper management has clearly decided that they're cost centers, and that's how they're going to evaluate them. Now, whether this is appropriate or not, that's a totally different question. I'm just saying this is how upper management is perceiving these three departments. Are the three departments centralized or decentralized? So let's be clear on what decentralization means. When a company has a decentralized structure, it means that each of the departments have a lot of autonomy with regards to their decision making. So they get to decide their prices. They get to decide their production schedule. They get to decide, how much they're going to charge to the external customers. So they have a lot of decision making ability. So when they are revenue centers, they're only deciding on revenue. When they're cost centers, they're only deciding on the costs. They're only controlling their own costs. When they're profit centers, they actually decide on both the costs and the revenue. So they decide on their selling price as well as controlling their costs. And if they're an investment center, which is not noted here, but if they're an investment center, they are a profit center, plus they have the ability to decide where they're going to invest their money in expanding or contracting or buying new property, plant, and equipment, intangibles. So these are the structure that they're in. And what it says is their ability to make decisions. So their autonomy with regards to decision making. So when we look at this, they don't have any right to make decisions. Like the glass department doesn't get to decide what they're going to charge the wood and metal departments, right? Upper management is controlling everything. The production schedule, therefore, this is definitely a centralized corporation. I'm not typing anything because, I'm not typing anything. Can a centralized department be a profit center? Why or why not? So yes, it can still be a profit center because the profit center just says that they are going to be evaluated on both costs and revenues, right? It doesn't talk, when we decide what kind of center they are, it doesn't speak to how much autonomy they have. So centralized and decentralized speaks to autonomy in decision making. Whether they are a cost center, a revenue center, or a profit center speaks to how they are evaluated. So keep in mind, these are two different things. These kind of centers speak to evaluation, whereas centralized and decentralized speak to how much independence do they have in decision making. So centralized departments can absolutely be profit centers because that's how they're being evaluated. All right. So to give you an example, let's say the glass department was given a transfer price, and then they were told that they were going to be evaluated based on their profitability. Now, true, they don't have any ability to, set their own production schedules or set their own prices to the other two departments. But as long as they're being evaluated that way, they're going to be a profit center. All right. They're just, in this case, because they're centralized, they're not going to have a lot of freedom with regards to making decisions. Okay, so separate out what kind of center it is from whether it's centralized or decentralized. I don't want you to think that these things are connected, like decentralized is the only one that have different centers. Not true. All right. Suppose the upper management of FC decides to let the three departments set their own production schedules, buy and sell products in the external market, and have the wood and metal departments negotiate with the glass department for the glass panes using a transfer price. Will this change your answers to 1 and 2? Well, the answer to 1 is still going to be based on how they're evaluated, right? So answer 2 is they're going to be decentralized, right? Because they're going to make their own decisions. So yes, it's changing the answer to 2 for sure. They're going to be decentralized. If they are evaluated differently and they're evaluated as profit centers, then it's changing my answer to 1. Okay? So keep in mind, we're separating. And are they more likely to be profit centers? Yes, they're much more likely to be profit centers because they now have control over their own pricing. So it would be foolish for upper management to continue to evaluate them as cost centers when clearly they get to make the decisions about their internal workings. Okay. All right, B, how would you recommend upper management evaluate the three departments if this change is made? Well, I would say that really depends. So they can negotiate the transfer price. But if the glass department cannot sell to external parties, then any internal transfer price is really arbitrary, right? If they have no external market, and the only thing they can do is transfer to wood and metal because nobody else, there's nothing in the outside market that wants their product, then probably making them a profit center doesn't make sense. Even though they can negotiate the transfer price, the fact is glass can't sell externally. So any internal transfer price is still an arbitrary transfer price. So charge more. There's no external market. Let's charge $400 for every sheet of glass. That's stupid, right? So when we look at the glass department, whether that would be evaluated as a profit center, I think it's questionable. And the answer would be, can they sell to external markets? For the wood and metal department, where they're actually making the windows, yeah, I would say that they should be profit centers because they're negotiating the transfer price, right? So they're buying their glass. If they can get glass from outside and they're allowed to buy from outside, then they really have total freedom. And then they have control over both their revenues and their costs, and therefore they should be a profit center. All right. That's it for this 22-17.